Today we have a special guest with us. We have Beth Curtis with Princeton Mortgage, who is
Hello.
joining us. Beth, thank you for being a part of this with us today. How are you doing? Hi, welcome to another session of Real Estate News with the Player Group. Today we have a special guest with us. We have Beth Curtis with Princeton Mortgage, who is
Hello.
joining us. Beth, thank you for being a part of this with us today. How are you doing?
I'm great. Thank you for having me on.
Fantastic. Now, you've been doing mortgages for how long now?
I've been doing mortgage lending for a year. I sold real estate for 15 years prior to that. So it's just kind of like moving into a different department, and
Gotcha.
really enjoy it.
Oh, fantastic. Well, today we're going to be going over, some of the common questions we're getting from a lot of people in today's market.
Yes.
What to expect from 2023,
Hmm.
um, and what your company has to offer anyone who's interested in finding out, what their buying power is.
Okay.
But I do want to start off with something from one of our blogs on our website. And if you guys are interested about more of this, we'll post a link with this as well too, so you can go and read a little bit of it. Um, but it says here, think twice before waiting for 3% mortgage rates. Last year, the Federal Reserve took action to try to bring down inflation. In response to those efforts, mortgage rates jumped up rapidly from the second from the record lows we saw in 2021, peaking at just over 7% in last October. Hopefully, buyers experience hopeful buyers experience a hit to their purchasing power as a result, and some decided to press pause on their plans. Today, the rate of inflation is starting to drop, and as a result, mortgage rates have dipped below last year's peak. Sam Coulter, chief economic at Freddie Mac, shares while mortgage market activity has significantly shrunk over the last year, inflationary pressures are easing and should lead to lower mortgage rates in 2023. And just to keep going there for just a moment, that's potentially great news if you're a buyer aiming to jump back into the housing market. Any drop in mortgage rate helps boost your purchasing power by bringing down your expected monthly mortgage payment. This means lower rates. Experts forecast this year could be just what you need to reignite your home buying goals. But there's a little caveat. I think we could be surprised at how much mortgage rates pull back this year, but we're not going back to 3% anytime soon because inflation is not going back to 2% anytime soon. And that was from Greg McBride, Chief Financial Analyst at Bankrate. So
Okay.
I'm curious, what are your thoughts on that?
Well, my thoughts are I don't know that we'll see 3% again in our lifetime. Some of that was influenced by government purchasing of mortgage bonds. So they manipulated the market a bit. It wasn't just letting the free market go. And so we're finding more of a leveling out
Mm-hmm.
of mortgage interest rates. And to give you a perspective on what I mean by leveling out, you have to look at rates long term, just like you do with the stock market. You have to look long term. So if you look 40 years out, the average interest rate for 40 years is around 7.5. So we were even at our highest point last October at the average for 40 years. So everybody's going, oh, they're so high, they're so high. Well, it's all relative. But we were at the highest point in the past 20 years. So if you narrow that scope down, for the younger people that haven't seen higher rates, 7 seemed like a lot. Now, going forward, I do think all we do is sit around and listen to different types of experts on where the rates are going.
Right.
Nobody has a crystal ball. Just like nobody can tell you what the stock market's going to do, nobody can with full confidence tell you what the mortgage rate industry is going to do. However, we do have historical data that we use, not we, the experts, economists use to predict the future. And every recession in history, not some of them, every recession in history, once it takes full swing, we've just started, so we're not in that deep recession effect period yet. But once it's been going a year or two, we're going to see rates come down because every recession in history, mortgage interest rates have come down. How much? We don't know. but they have come down every time. So that's fact. That is fact. History, those are facts. Now, will the mortgage rate industry go that same route? Experts say yes. Is there a guarantee? No. So high fives to mid sixes is where I think it's going to land.
Gotcha. Okay, so you think they will drop, but they'll probably stay within that range.
I do. Mm-hmm.
Awesome. Okay.
And so do the experts that I listen to. I don't come up with that really. I'm just listening to them.
Oh yeah, and you know that's something that we kind of teach here at our company. When you look back at the recessions, like you mentioned before, that's the same thing with home prices. You know, they're always expecting home prices to drop. Well, the fact is, outside of 2008 and 2009, home prices actually continue to appreciate. They may have leveled off, but they still continue to appreciate. It may have been a slow appreciation, but they really didn't crash or drop. And of course, we know 2009 was a completely different.
Well, that was a different. That's right. And history shows that that's rare, where constant, maybe not extreme appreciation, but gentle appreciation always happens, except for that one weird exception in the 2008-9 period. So I agree with you. I mean, we have to look at history. That's all we have.
Right. Now, I'll tell you this. So we encounter we get close to, I want to say, over 2,000 people a month registering on our website, right? And we encounter a lot of buyers that are on the fence, who are, you know, some of the comments we get, well, we want to wait for the right time to buy. We want to wait for mortgage rates to drop. What type of information do you have for those people who are on the fence? And a lot of times they're scared to speak with a mortgage broker or a loan officer because it's
intimidating. It's
very intimidating for them. So what advice do you have for someone who's on the fence?
Well, first and foremost, my slogan for work is mortgage made easy. This is not complicated. But just like real estate's not complicated, it is if you don't do it for a living, and mortgage lending is complicated if you don't do it for a living like I do. But it's our job to make it easy and understandable to the lay person that doesn't have any knowledge. So if you don't have a lender or a realtor in your case that can make this understandable, you're not with the right professional. It's got to be something, they don't understand it well enough if you can't understand it based on their explanation.
Interesting.
So did that answer your question?
Yeah. I mean, it really, here's what I found, right? And until you take that initial step, you're really not sure what you're capable of. And getting with a professional like yourself can be the deciding factor of whether or not you continue to stay in your current situation, which could be paying rent and throwing away money, which could be avoiding upsizing or downsizing, or which could be holding you back from purchasing your second home, a vacation home or something like that, right? And so what I have found, and surprisingly enough, is when people actually reach out and have that conversation, I would say about 95% of the time, they're very shocked that they have the buying power that they have.
Correct.
They didn't even realize that, right?
Yes.
So, for those who are on the fence, it's always good just to consult, and it doesn't cost you anything, right? It's completely.
I was going to say, it's a real user-friendly loan application that we send out. We just get basic information. We pull their credit for free. They're not obligated to anything, but they are given a wealth of information. If they have credit issues, we can talk to that. We can show them what their monthly payment's going to be so they can compare it to that rent to see if, hey, we're renting for the same amount we could buy this nice house in, or we could upsize for only $300 more a month. Without calling a lender, you don't know where you stand, and you're just kind of stuck in limbo, where if you call us, you're not obligated to anything. We pull your credit for free, and you get a wealth of information.
Now, when you guys pull the credit, does it hurt them in any way at all?
That's a common question we have. It is reduced. It can reduce their credit by no more than 3 points. However, if you have decent credit, 3 points is not going to throw you out of the ball game. However, that credit report is good for 120 days. So we don't have to renew it. If we don't find a house immediately, that credit report is valid for 120 days. And due to law, they can have other lenders pull their credit, and only the first 3-point dock happens. They can call 100 different lenders within a 40-day period, and it only reduces them that one time. That gives them freedom to shop around. So they're not, a lot of people think, well, I don't want to call you because I've already had my credit pulled over here. It's only docked once, and it's free. And I'm going to give you lots of free information, and you're not obligated. There's just no reason why not to call.
And the beauty of that too is that even if someone's not ready, they now have a foundation to get everything in place to get ready, right?
Exactly. I might tell them, well, you're going to need $20,000 to get this loan, da, da, da. And they're like, well, we only have 10. We got to save some money. Or they have a few little credit issues that I can easily tell them how to clear that up. Or they might decide that they're going to sell a car because the note's a little more than they want. So they're going to get rid of this new car, maybe get, there's all kind of ways we can arrange their finances. And sometimes, yes, it takes 6 months. If you are in the market for a house in the next year, I would say you need to call them now. It's so different from automobile financing. Every time I went for a car, I just go car shopping. I'm excited. And then I find the car and they take me in the back and help me with financing. Yep. Houses are different. You need to start with your lender, get your ducks in a row, and then head out with your realtor, with you, Calvin.
Oh, I appreciate that. Or with the Premier Group, right?
That's right, with the Premier Group.
So let's talk about this. So I know, I've been to several of your classes, been very, very impressed by those.
Thank you.
You have a lot of programs that you guys offer in-house. Tell us a little bit about some of those programs you're helping with people this year.
Okay. Well, the hottest one right now, and you won't hear about it just at Princeton. It's hot everywhere. It's a great product. It's called the 2-1 buy down. And the problem that loan product solves is the fact that we did have a lot of appreciation in real estate. So house prices are higher, and we've already discussed they're not coming back down. They're just not. They might not appreciate as fast, but they're up. And then mortgage interest rates are higher. So you add that together, higher house prices, higher mortgage interest rates, that equals a higher monthly payment. That's the problem we're trying to solve for buyers. Higher monthly payments. The 2-1 buy down reduces the borrower's interest rate the first year by 2% and the second year by 1%. On some loans, Calvin, we've seen this reduce the borrower's payment in year 1 by $500 a month, and in year 2 by like $300 a month. Now that changes per loan amount, but it's real money. It's several $100s a month that saves. It's paid for by the seller. And then remember when we talked about earlier when interest rates come down with the recession? Yes. Within that 2 years, they will likely refinance, and any money in escrow to fund this 2-1 buy down is used as a principal reduction when they refinance. Don't want to get too complicated. Just all the money, either it reduces their monthly payment or they get the money back at closing on a refinance. They get the benefit of all the money the seller gives them towards the 2-1 buy down.
Oh, wow. Wow.
The ultimate result is a lower monthly payment for the first 2 years. That's what we're looking for, lower monthly payments.
And that gives them a chance to, like you said, refinance when the rates do go back down a little bit more.
Right, because going back to what experts say that this recession will reduce the mortgage interest rates within about a 2-year period. That's the average. And this program lasts for 2 years. It reduces the monthly payment for 2 years. See how that just fits together? They created this program as a Band-Aid for the higher rates until they come down due to the recession, and then they can refinance.
Okay. Wow, that sounds great.
Yeah. A lot of people are buyers and sellers we're getting a positive response on that.
Gotcha. Okay. Now you also have another program that's really, really good too. And for this one, I think people are going to have to reach out to you because there's a couple different ways to run it, right?
Yeah. We have 3 down payment assistance programs. One is forgivable after 5 years. You pay a note on it's a second mortgage, a second lien against the house. It's just like a second loan. And if you don't have the 3.5% down, that cash money, which a lot of people don't, because see, inflation's real high, groceries are high, everything's high. So another problem we're seeing is people, they're like, well, we don't have $10,000 to $20,000 in the bank. So they came up with a down payment assistance program. It's that you're basically taking out a second loan against your house, second mortgage, for the 3.5%. You pay for that for 5 years. After that, it's amortized over 30 years. If you're not late one time in that 5 years and you live in the house, you can't rent it out or move or do any, Airbnb. You have to live in that house for 5 years and not be late on your note for 5 years. Years 6 through 30 is forgiven, meaning free. But you do pay for it, you pay a note on that loan for 5 years. So that's a really sweet deal. It's helping a lot of people that don't have the cash money, because in this economy right now, cash money's, they want a lower note. We don't have a lot of money in the bank. These are solutions to those problems. Now, and I can go into more detail with anybody individually, but that's it in a nutshell.
Well, and I think some of the benefits that I found to that was, one, so when you consider something like THCA or Georgia Dream or USDA, those are all regional loans, right?
Correct.
They're all based on location. Where this one, I think, is not, correct?
Yes, and I discussed that with our loan specialist. I brought up THDA recently, and they said, well, our down payment assistance program is basically the same thing, but it's not state specific. Or, USDA is great because it's 0% down. But I have a client looking right now that's approved for USDA, and every time he finds a house, it's not in the USDA appropriate zone. So we're looking at this, the down payment assistance program. We're looking at a few other things, but yeah, you're right. It's not based on location.
Right. And so, and the other great thing about it is you're basically making a monthly payment towards your down payment, which is included in your actual loan.
Right.
Right. So you're not having
you have to come up with that money one way or the other. This is just financing it.
Right. Right. So I really like that program. I like that a lot. So both of those are great programs.
They are.
I
think they're good buyers.
One of the things that I really have appreciated about you, so as realtors, we tend to work pretty much all the time.
Yes,
right?
And that.
And I can say that you've been very, very easy to get a hold of. If someone wanted to get a hold of you to get more information about your loan programs and what you have to offer, or just get some advice and pick your brain about what their buying power is, what would be the best way to get a hold of you?
Well, I think two ways: email or my phone number. And email is bcurtis@princetonmortgage.com. Or, of course, myself. Feel free to call or text 423-771-9511.
Okay, fantastic. Well, anything else that you'd like to tell our audience before we end this call today?
Well, I'd like to return the compliment, Calvin, that my experience with you thus far is that you are a dedicated professional. You want to help buyers. You want to give them the best information, the best representation when they're looking and making offers on houses. So I just recommend Calvin Shropshire eXp Realty based on your professionalism that I have experienced. And I appreciate you having me on today.
Well, thank you so much for that. I appreciate that. Yeah, I can tell you, look, I'll be 40 this year, and the first experience I had with purchasing a home in my early 20s was horrible. So we want to make sure that doesn't happen to anybody else.
No, yes.
So that's why I love the people that we've surrounded ourselves with, and like yourself and whatnot. So thank you so much for joining us today, Beth. Looking forward to help working together to help people accomplish their dreams and get into their dream home. So thank you so much.
Exactly. Thank you, Calvin. I appreciate it.
All right.